First of all, Mr. Bennett mentioned some of these things in this slide, so uh, some of this might be a review, but again, looking at the biennial budget that came out from the state back July 1st of 2007. Biennial budget, as you can imagine, is a 2-year budget from the state. Every 2 years, the legislature and the government put out a new budget. And basically during that time, they can change the funding formula for schools in Ohio and kind of tweak it, and they did this again in 2007, and actually to the detriment of Little Miami schools at that time. When that budget was passed, there was over a 2-year period about a $6 million loss in revenue to the district. Again, $6 million on roughly a $30 million budget, you can kind of figure out that it's not going to take very long until something else is going to have to happen. Little Miami has 2 sources of funding. That is the state and the local taxpayers. The state, obviously, we have no control over. The legislature and the governor put out their budget. Now they do it with a little bit of input from the districts, but they don't really pay a lot of attention at the end of the day. Basically, they put out a budget, and the school districts are left doing the best they can with it. Since 2002, the reason we picked 2002 was that was the time the last operating issue was passed in this district. It was actually a property tax issue. And again, as Mr. Bennett mentioned, that was rolled back a year early. But since 2002, since the last time the district's been out for operating revenues, we've had an increase of about 1,145 kids. That's about 37% increase in enrollment. Now, during that time, again, we have 2 sources of increased funding, state and local government, or state and local taxpayers. So we will look at here in a minute what kind of funding we've seen from the state versus what kind of funding we haven't seen from the state during that time to help pay for those expenses. During this time, since 2002, you see the percentages up there. The state has a funding formula, again, where they say a certain percentage of your revenue is going to come from the state, a certain percentage is going to come from the local. And in that funding formula back in 2002, 44% of our revenue in that funding formula was coming from the state. Now fast forward that 6 years later to today, we're about 23% coming from the state. So you can see the trend that the state has put out, and we're going to see a graph here in a minute that's going to kind of show that, but how they're kind of decreasing their burden of funding and kind of shifting that to the local taxpayers. During this time, even though the state's kind of cutting back on their funding, we all know that our insurance costs are rising, salary costs are rising, fuel is going up. You can see fuel's costs have more than doubled what they were 4 years ago. We're spending a little over $2,000 per day on fuel to transport kids, about 98 square miles here in the district, so fuel costs add up pretty quickly. This is the graph I had mentioned that shows the percentage of state versus local. Again, going back to 2002. You can see this yellow line here. The state funding percentage was 44%, and fast forward that all the way to 2008. You can just see the trend of downward funding from the state. Again, to 2008, 23% funding from the state. Again, during that time, 1,145 new kids. What does it cost to educate those kids, and where does that money come from? What does it cost to educate those kids? As you can see, the green bar here, obviously our costs rising, and it's rising not only because we've seen increases in fuel, insurances, salaries, but also because obviously we're growing. An average of 190 kids over that 6-year period. You can see a total of about $34 million if you add all these green bars up. $34 million in increased expenses over this time. At the same time, where are we going to get our revenue? Where have we gotten our revenue to cover those expenses? If you look at what the state's done, you can see this little yellow bar across the bottom. The state's contributed a total of about $5.3 million. So $34 million in expenses, $5.3 million in increased revenue from the state. So again, if we have 2 sources of revenue, either the state or the local taxpayers, the state's not really doing their share. They're not kicking in and helping out with the growth. And it's not something that's unique to Little Miami and Warren County. It's something that Warren County schools in general are facing. There's a lot of them are seeing the same type of trend where they have increases in enrollment, and the state's not picking up and helping very much with the increased revenues. If you go back to the state foundation formula, look at the before and after effect. If you look at the green bar here, what was supposed to happen? Mr. Bennett had mentioned a plan of finance that was going to generate some additional revenues from the state. With that property tax levy being rolled back a year early, there was a piece of the state funding formula the district was going to take advantage of and try and shift some of that burden of funding from the local taxpayers to the state. And that was going to work really well under the biennial budget that was in effect before July of 2007. when that new budget came out, again, the state can do whatever they want every 2 years. They can change that funding formula, and change it they did. After they changed it, you can see no increase. So again, this is what, the yellow is what happened, what actually happened, the green was what was supposed to happen, and kind of put a bind on the district in terms of being able to operate. What is the district's current operating millage? How does it compare to what it's been historically? If you go back to, this graph goes back quite a few years, all the way back to tax year 1994. And you can see during this time, kind of generally going down, jumping up there in 2002. That was the last operating issue, and then coming back down. And again, this comes back down when that operating issue was rolled back a year early to where we are today. And where we are today is this 20 mil floor. They call it the 20 mil floor because it is the minimum amount of millage that a school can collect in Ohio and still be eligible for state aid. If you go below this 20 mils, you give up your state funding. And even though our state funding percentage has decreased, last year we still got about $8.3 million from the state. So if we go below this 20 mils, we lose $8 million. So again, that's something we don't want to do. A common question we've been getting from the community, and a very good question, is there anything that you can trade? Can you give back any millage in exchange for this earnings tax? And the answer is we'd love to. We wish there was some millage to give back, but unfortunately, there isn't. Again, being at the 20 mil floor, you can't go any lower. If you did go lower, you lose your $8 million in state funding, so that's not something we want to do. How do we compare the other districts in Warren County in terms of our effective millage? Again, you can see Little Miami right here in the middle. All Warren County districts are listed up here. Little Miami, again, at the 20 mil floor. And compare that to the other districts in the county. Your average is right along this line right here, right about 27, 28 mils. So again, if this earnings tax were to pass, it's not like Little Miami is going to go way off the charts and be collecting way more than anybody else in the county. Basically, if it were to pass, it generates the equivalent of approximately 8 mils. So it's going to bring us up right up here in line with the average of other area schools.